Good morning, Tim Haefke from TopNotchTrading here on Monday, November 17th with today's MrTopStep update. Well, everybody I'm looking at is saying that we're going to be seeing a high pretty soon, that the move in the S&P 1% more, maybe 2% more, and we're going to be topping out. I'm not a full believer in that because, boy, I still have this thing in the back of my mind about the NASDAQ on its quest to find 44.61.5 before the end of the year. Now, evidently, we could see a pullback because we are getting awful toppy, and there are some signals out there that are telling me, I should say, that we are seeing some negative impact on the market. And one of these ideas came last week from a Wednesday settle to Thursday's trade, I should say, high-low. The S&P, the Russell, the mid-cap all had outer daily ranges. They took out the previous day's high up, took out the previous day's low on the bottom. That is a negative signal, but I wasn't confirmed because the NASDAQ refuses to take a high and low out from the previous day. The tech sector is the one that's showing more strength of late, but that could come and go just as quick as it has rallied. Today just looks like they were going to make new contract highs from last week up at 42.27. They take out Friday's high by 25 cents, 50 cents, and before you know it, they're down making new lows today. But they're still inside their trading range. So I still don't think we're going to see any kind of a big aggressive sell-off, but believe me, the grind is higher, and it's a grind. The volume is starting to show a little bit more on lesser side, but if they do take them down, that's where they'll pull out the rug, and it'll be a faster move south than it'll be up north. So as they grind to new highs, if we do see a slip, we take it down. A big point of interest came from the weekend. Last week we made a 25.5 low in the S&P for a weekly daily, and overnight, or the weekend I should say, we see a 25 quarter low. So it's a retest kind of a double bottom from last week's low. And if they can get above 43, last week's high, Mr. Fibonacci says we're going to go out and see about 2062. That's what they're looking for, 2062. And that's right inside the daily, weekly channel trend that I keep everybody reminded of that started in 2011. To the high of 2012 and so on. It's there, all right? With that in mind, we'll see you next week, or no, I'll tell you what, I'll come back on Wednesday to see if we see any further signals that give us a negative impact. Have a good day.